I would like us to get started in time so that we have ample time to solve questions and look at some fundamentals in the accounting records we are looking at. We'll be looking at containers account and having considered container account, we'll also look at what we call the investment account. So I have the link for the YouTube sent to you already, Abibat, and I don't know, maybe your other
Okay, sir, I've
colleagues
seen it,
also
sir.
have access to it. And those, they can also copy it online. Now, when we talk about container account, the general word I want you to know about container account is first of all to know the element that we want to account for. That's called container. When I talk about container, we are looking at container from two instances. Nobody will ask in accounting that what is the meaning of container. Rather, we look at how do we account for container. So when we talk about container, container simply can just be an item in which products are kept. And there are two forms of containers from whichever you have it. We have what we call non-returnable container and what we call returnable container. So when we look at two classes of container from what we're having here, we say we have non-returnable container and what we call returnable container. I always say this to students. Now, why do you cry? My just look at it. When you look at container, you are just looking at pack. Let's say, for example, you went to the market to purchase biscuits, and they will keep the biscuits in a pack. There are two types of pack. You have the one in the carton and the one in the wrapper. The one in the carton, which you all take home, you won't take it back to the person that you bought it from. So that is referred to as a non-returnable container. And what are the fundamentals I just want you to see is that a non-returnable container is also part of production cost. So in that case, you'll be looking at them as an element of your what? Inventories. So if you are talking about goods that you want to produce, the containers as you have it in the cartons, so they are like products that you also have to cater for. But when you talk about non-returnable container, and these are the things I want you to say, sorry, about non-returnable container, once you buy them, they are part and parcel of what you are buying. But when you talk about returnable container, a lot of us think at container as something big. We'll break it down. Let me just start with this. If you buy the bottle drink, when you consume the item in the bottle, what will you do to the bottle? You return it to the seller because the
I'll
person
try it
must get
away.
his goods back. Now, let me quickly give you this. If you go to any woman that is selling any of these bottles and you want to buy soft drink, assuming it's 100 now, will you get to the woman and just pay 100 naira and pick the drink? No. Because if you are going with her bottle, she will tell you, madam, please drop something. What do you drop? What do you call that normal language that you have to use to drop something? They say you should drop what? You should deposit. Now, when you are buying the drink, you give the woman 150 naira. When you are through with the drink and you are returning the bottle, she will return 15 naira to you. All these things are also what we have when we talk about returnable container. Now, I have this note which I sent to you earlier, and I want you to just see the note and see the fundamentals as how they relate to what you are going to do in the class today. So let's see what we are going to do and get the beauty of it. From what I've said earlier, I've given you types of container that we have and importance why container is being done. A non-returnable container, these are containers which consumers are not expected to return. So in that case, a non-returnable container will actually be accounted for. Now, what you have seen here is just a simple analogy of what I want you guys to see. You might not need to write so that you get to see what we are looking at. So let's take the first class, element of the class, which we call non-returnable container. From the element of the word non-returnable container, we have said that they are part of the element of what we use to produce. In that case, we account for them as inventory. So you might have any way they want to call it. Organization can call it whichever name that they want. They might call it container inventory account. They can call it product or production. So, but for this class, we refer to it as well called container inventory account. Is the normal way in which we prepare for our inventories. We are saying that in the organization, you have the inventory of what you want to produce. And once you get that inventory, you account for them. So quick one, and it makes our job easier. Inventory, is it a debit item or a credit item? Inventory, is it a debit item or credit item? I need you to answer so that we'll make our job easier. Jomiloju and Abibat, is debit entry? So that is why you get to see that it will be on the debit side. So you have this. Then the next thing is that if you are buying more of the inventory because it's purchases, you credit your bank account of that, then you bring it here and you have it as what we call bank. And most times you can refer to it as what we call the container purchase. Because there are sometimes you might not be the one purchasing them. At the end of the period, you have the value of what you still have in the store that you have not consumed. So what are we working towards? If I have the value of what have not been consumed, so the balancing figure will give me the amount of the container that have been consumed or used for production. And that is that. So if you are going to have this on and you have it in your exam, just quickly pocket this and you have it. But I can't, yes, please. Yes, I did, Sonia. I can't hear you. You are speaking, but I guess your mic is not transmitting. Any question? Okay. 10 out of, if you are having a question in the exam, no examiner, if they are going to ask you this question on inventory, it might be 1 out of 1 million this question. At this point, you are talking, but I can't hear you. Please check your mic. At this point, Christiana. Okay, can I go on? Okay, I think Christiana is off the line. So let's just move on. So I want you to know that the examiner cannot ask you this 100 chances that you please just get to know what we are doing. And whatever is the amount of the container consumed will be transferred to your production, which will go into your manufacturing account. Adeshino, do you have any question? Yes, I know your network went off, so you can ask your question. I've seen that on your chat box.
So I didn't really get your explanation because of my network.
Okay. The explanation I'm given is that when you talk about container inventory, this actually relates to non-returnable container, like the normal item of having our cartons, or you talk about the nylons that you use in wrapping a particular product. And when you have that, I can, like what I have on the board, you see that inventory has a debit balance. is an asset. So when you purchase more, you debit it in order to increase that item. And at the end of the period, you have the ones you have not consumed as the balance carried down. So what are we working towards? Is that we must be able to know what is the total amount of container that we have used. And together, that will be the balancing figure that we have here and will be added to our manufacturing cost. So that is it. Now, why I'm starting with this is that I also saw that from what you guys would have been taught on manual, is that you can also have this to be accounted for. Please, you might not have it as a main question, but that can also be a saving grace. Now, that is for what we call non-returnable container. How can you have question be asked on this? So let's just look at an example, then we'll now go to the next one. So for this, as an example, I would like to ask this question and I want you to give me answer. Yeah, so let's say which name can I use now? Let me say Johnny Production Limited, located at Ikorodu, has the following information about the container for packing the product. So we have your balance before and 1st January 2019 is 10,000. Purchase for the year 2019 is 50,000. And we are now told that the balance at end, which is 31/12/19, is 15,000. State the cost of container consumed or used for production. So class, pardon me, my handwriting is trying to get itself. Jomi Production Limited, located at Ikorodu, has the following information about the container for packing the product. Balance brought forward 1st January 10,000. Purchase for the year 50,000. Balance at end 15,000. So class, what is the amount of the container, cost of the container consumed or used for the production? Answer please.
45,000.
Pardon?
45,000.
So quick one. So you can see that I pray they ask you that in the exam, but me and you should have it at the back of our mind that no examiner will ask you that. In case the examiner asks you, you'll be thwarted. That is window. So we now have the one purchase bank. That is how much? 50,000. That gives me 60,000. Then the balance carried down, which was not used for production. So I now look for the balancing figure. So what's the balancing figure here? In order to know the unit consumed. So the one that was consumed or used for production. What's the balancing figure? 45,000. So that's what we have. Okay, that's very simple. Let's go to the next type of container. What's the next type of container that we have? It's called what class? Returnable container. From what I have told you earlier, I said when we talk about returnable container, we're looking at container that must be returned after those containers have been used and their products have been, like the one that you guys can see are the one that you see when you see products are being shipped into the country. Normally, the containers must be returned. Now, I'm going to start with the definitions of term. Once you guys can understand the definition of term, you will be good to go. Now, when we talk about returnable container that are charged out, the first term that you need to know is called charge out price. It's all called charge out price. So what do you understand by the word charge out price? That is the price that is charged once the goods is given to the customer. So when we say charge out, amount charge per container, just get that word, amount charge per container. And please, when you talk about this amount charged out, I always tell my students to have something at the back of my mind. I will take it back to what we have in terms of our normal business all of you always do. You went to your store and you decide to go and buy bottled drink. When you are buying the bottled drink is actually 100 now, but you are paying 150. That means that money called the charge out is containing two things. So that's why when we talk about charge out, it's containing two values, which we refer to as what we call returnable price. The two values are returnable price, or it's called return price, and what we call higher charge. The higher charge, you are saying that this is the price for using my container. And the returnable, from there, now give us this, that is the amount that will be credited into the customer's account once the container is returned. So from this name, the word returnable price, we are talking about the price that is returned to the customer when the container is successfully returned. And I have my reason why I'm saying that. If you go with the bottle of the woman and you decide not to return, you are not collecting your returnable price. So the money becomes that of the owner. Why charge out? When you talk about charge, higher charge price, are you there now? Please, higher charge price. That is the amount that the owner of the container earns when the container is returned successfully. So that is it. Now, when you are talking about this container, the container must be purchased. And when containers are purchased, we talk about the cost price. Cost price is the cost of acquiring another container. And in that case, some other clans will refer to it as what we call purchase price. Please, at no time should you record any container you are buying at what we call book value. It is recorded at the cost price. That means that is the amount you bought the container. Now, this amount that you bought the container is different from what we refer to book value or what we call valuation price. Now, I can ask this question for free. If I purchase a crate, an empty crate for 10,000, after some years, that crate cannot still be valued at 10,000. Why? Is because that crate would have been having some values in which it would have been eroding. And that's why when you are talking about book value, the book value for container account is defined as the cost price less the depreciation. So I'm bringing out some things for you and that we need to have. Let's go back. When we talk about charge out price, that is the addition of returnable price and higher charge price. When we talk about book value, that is the difference between cost price and depreciation. So those are the two things I want you to have now. Now, what do you call book value? We said that this is the value at which each containers are recorded in the statement of financial position. So, which you also call the balance sheet. So we are talking about the book value or valuation price, or you call it the stock taking price, as the value at which each container are recorded in the statement of financial position, which alternatively is formally called balance sheet. So we got that. We'll move to the next terms. Now, in the next term, I've also explained to you what we call depreciation, the amount that is written off the purchase price. So once the purchase price is reduced, then I give us what we call book value. Now, another thing we now need to also learn is that when we are talking about non-returnable container, you need to learn what we call policies. There are policies that are around returnable container, not non-returnable. And the policies are very simple. We talk about duration. If you are told on 1st January 20, you went to collect a particular container, charge out, and you are told that you are to return it, is to be returned in 3 months, class, what will be the deadline in which this container must be returned? What's the deadline? 3 months? What will be the deadline, please?
31st of March 2020.
Thank you. 31st of March 2020. Now, this is where we are going. 1st of January 2020 was the day that you have what we call the item being charged out. And the deadline is 31 March 2020. Between, that means from 1st of January to 31st of March, that period, any container in the hands of the customer is still referred to as what we call returnable. Is still referred to as returnable. Now, where am I going? Is that anybody that fails to return the container on this day, such container in the hands of the customer will be referred to as what we call retained. Retained. So I'm introducing another term. If any container is not returned within the stipulated period, such container will be defined as what class? Retained container. That means those containers are still with the customers, and once those containers are not returned without that stipulated time, it means those containers will be referred to as what? Retained. Then two things will happen. One, it means the customer will not be able or will not be entitled to the returnable price. So it means they are submitted that. Two, it means the person who owns the container has earned a profit that we refer to as profit on retained container. I will repeat that. We always have policy with returnable container, and that policy is very germane. Is that the date in which the contract was charged out and the date in which the container must be returned. Within those periods, the customer has the grace to return the container. And if he does, he will be entitled to his returnable price. Any day after the grace day or the deadline, such container in the hand of the customer will be referred to as what we call retained container. And at that point, the customer will not be entitled to the returnable price, and the owner of the container will now go further to earn a profit on the retained container. Is there any question on that? Okay, if there's no question, we move to another phase. So you now understand what we call retained container and returnable container. Another thing that can also happen to returnable container is that returnable container can also be damaged. Maybe before the container is returned, it can be damaged. When the container is damaged, it means we need to value it. There are other two factors that can also happen. Is that if the container is damaged, they can decide to sell the container. And when they sell such container, we call it scrap value. Are we there now? Whatever they realize from it, it will be called scrap value. Please, if a container is damaged and they could not sell it, we just refer to it as being damaged. But if they could get some income from it, we refer to it as what we call scrap value. It means they got some money from it. Now, having gotten all this, what are the other things that we also have to put down? Is what we talk about container inventories. When you are talking about non-returnable container, there are two things you have to say. That the container, if they are still in existence and still in good shape, the value of the containers in terms of their units and prices will be maintained in two instances. It will be recorded in the warehouse. That means it's still with the owner. And it will also be recorded in the hands of the customer. Those ones that are still within the grace of being returned. So when we get to the account, you get to see that when we are talking about the value of container, we are going to look at the one that are in the hands of the owner, which will be in the warehouse, and the one that is in the hands of the customer. Now, I've been able to explain all these terms for you, and you'll be able to know what are the amounts of the containers that we can have. Simple one that we just need to note. I want you to look at what we call analysis of container in the store. You'll be told balance brought forward, and we are going in terms of units. We are told in the warehouse units, we have 100 units of container, and in the hands of the customer, you have 120. During the year, you are told that they purchased 300. That means this is the total amount of containers that are available. By the end of the year, you are now told balance, because the examiner will give you one, and that's very, very simple. Is that they will give you the unit that is in the warehouse. We have 80, and you are told the ones in the hands of the customer is 20. Class. When you are given all this information, the examiner is driving at something. That means they want you to tell us the units of containers retained. And let me ask, let me give you this task, just fix your brain. How many units of the containers have been retained by the customer? How many units? And give me your answer by muting your mic, or you can just type the answer in the chat box. How many units? What is the answer? No clue.
100.
100. Okay, that is one school of thought. That is from Jomiloju. 100. Who else? Okay, if there's nobody,
100.
what do you say?
100, sir.
100. Okay, let's get that. What's the total unit of inventory that is available by this organization? We have that is 520. And the ones that we have left in the store, very careful. And what we have that. So when you are giving me answer, you need to be very careful. So we have 100 plus 120 plus 300. That is 520. And the amount that is left in the warehouse and the one that we are still under contractual agreement to collect from the customer is 100. So class, the unit that have been retained is not 100. It is 420. And I have my reason why I'm saying this, because if you cannot determine the total unit that have been retained, then you can't get the profit on retained container. So the unit of container that is retained or that has been retained by the customer is not 100, is 420, because you have 100 left in the store, 80 in the warehouse, and 20 returnable under the contract from the customer. So that is it. Any question? Okay, if there's no question, let's go to the accounting method and all the rest. Now, when you talk about the accounting for container, the accounting process, we'll be looking at 3 methods. The first method we'll be looking at is what called the container statement of profit or loss method. It depends on whichever method or name the examiner wants to call it, but you don't need to get running away from it. There are 3 methods. The first method is called container profit or loss account method. Then we have the second method. The second method is referred to as container suspense account method. Then we have the third method, and all these methods we are going to look at them from what I've given. We have what we call container trading account method. I would like to start from the third one, and because I'm going to start from the easiest, then we'll move to the one that's a bit easier. Then let's start with the first one. We have what we call container trading account method. What are the books of accounts to be maintained or ledger when we are talking about container trading accounts method? The first ledger that you need to maintain is what we call container inventory. Container inventory account. Then the second account is called container trading account. So if you are asked to use container trading account method, there are 2 ways in which the examiner will guide you. He might give you a question, then you'll be told use container trading account method, or you'll be told prepare the following ledger: container inventory account, or they call it container stock account, and then container trading account. Once you see these two ledgers alone, that means the method the examiner wants to adopt is called container trading account method. Now, when you are accounting for container accounts, what you need to note is that there are three units of information you need. You must be able to know the rate, or which you call the price. You must be able to know the unit attached, and then you know the amount. So let's take those accounts as they operate. So the first account I'm going to look at is what we call, under the container trading method, we have what we call container inventory, or we call it stock account. Now, please, whichever way you are going to put your information, I'll prefer you use whichever that is being given by whoever is your prescribed examiner. You can use this word here, price or rate. Then we have here the units, or call it quantity. Then you have here the amount, or you call it value. So we have price, quantity, which can also be in units, or you have amount. So this is the amount and what. So I'm having two ledgers which are in columnar form. So I've done the first one, container inventory account. So I need to prepare the second one, container trading account. So we have the price, we have the quantity, and we have the amount. We have the price, we have the quantity, and we have the amount. Now, general knowledge. And it's a trick I want you to just note. When you are preparing container trading account, the container inventory account, or the stock, everything inside the account will be maintained at book value. Hello? All the items there will be maintained at book value. But please, that does not mean that you just go blank and say that everything will be at book value. There's an exception, and I'll let you know that exception. And once you get that exception, your account will balance, because it must be maintained at book value, and this account must be self-balanced. So that is that. So in that case, it simply means the trading account will be a double entry, and it will equally be operating as an account in which we are going to use to determine our profit. And I'll start the story this way. I'm going to start like a storyline, and you can get the double entry very well. Inventory account is actually an asset. So the first thing you have the balance, or whatever you have in the container in the warehouse. They will tell you the unit, and then you have that which is also in the hand of the customer. You need the unit. Now, every other information that will be given to you is not going to be just values like that, but you'll be given the book value, the charge out price, and other. So the first thing you need to do here is that this will be at the book value, and that will be strictly given to you in the question. You see it, you don't need to cram. So that is always the pattern of containers account. The next thing that you'll be told, that the containers, the owner purchased more. So in which you have what called purchases, and you have the unit. Now, this is the guy which is the exception to the rule. Because when you are buying container, you will not buy at the book value. They will give you the cost price. So when you hear CP, I'm talking about the cost price. If you look at what we are doing now, this is now what is changing the narrative. Because when you have this, you have it at book value. You have this also at book value. But this will not be at book value. It's going to be at the what? At the cost price. So those are the informations you have. And the cost price that you're having here is that you are paying for this from your bank. So that is your double entry. You debit the inventory account and credit the bank account. Now, once you are doing this, the information will now have to flow. The information of the customer, and I want you to be very, very careful, please, is that whatever is given to the customer that has not been returned, it will be accounted for here, and such amount will also be accounted for as a double entry in the container trading account. So what you are seeing me have here is the amount that is still in the hands of the customer. But the value that we are going to use here is not going to be the book value. Rather, it's going to be the returnable price. So when I talk about you getting the value, so at the beginning of the period, you have the opening inventory, and the amount that has to do with the customer will be taken to the what? Container trading account. That is that. The next question or the next information that will be provided in the exam will be the amount charged out. That means the amount that is being collected by the customer. You now have that here. You call it charge out. And that will surely go to your bank or cash. And please, it will be at the charge out price. So you are going to have the charge out price. And the amount of the unit will also be given to us. So that tells us the total unit that have been charged out. Now, the corresponding entry of this would be in the bank account. Now, let's start going to the fundamentals. The first thing that will happen is that some of the customers will start returning goods. They start returning the container. When container is returned, what happened in your container trading account will be the opposite. So what you have to do, we now talk about what we call container returned. The container that is being returned, we have them in units. It will be valued at their returnable value. Returnable value. And please note that amount will be accounted for. So they will be at their returnable value. And once it's being returned, it means that you'll be paying them. Yes, please. What's the question?
Why do you write Z under this quantity and AA under this?
Thank you very much. Why I have AA here is that is the amount that was in the hand of the customer at the beginning of the period. Are you there? That is unit. It's even from the amount that is being charged out there. They have to come and collect again, which is this excess. Now, the ZZ here represent the total units of container that have been returned by the customer. Because they can't be the same amount as they have, and it won't be the same amount as they have equally collected more. But what I want you to pay attention to is which rate or price will I be applying, which is the returnable value. If you go back to what I've done under the container inventory account, everything here is at book value. But I told you, don't just take that as just information and say that everything will be at book value. Everything can be at book value because the purchase value will be at the cost price. Are you clear now, Sonia?
Yes, sir. Thank you.
Okay. Now, I haven't gotten the the container return, because that is information the
Mr. Emma, I
examiner
did
will
not get
provide
that
you.
part too.
Okay, let me explain. Listen, let's start from the beginning. The first information you have is the total unit of container that you have in the warehouse. Did you get that? The ones in the warehouse and the ones still in the hands in the customer. If you look at them, I will keep them in the container inventory account and they will be at book value. But the one in the hands of the customer will be monitored in the container trading account. But when we get to the container trading account, we are not going to use book value. We are going to use returnable value. That is the first information.
Mr.
The
Emma, I did not
next,
get it too.
yes, Jomiloju,
I did
I'm
not get
listening.
what you were saying. My network was breaking. I did not get what you were saying.
Okay, did you understand from when I said the balance brought forward? That means the balance at the beginning.
Yes, yes.
We have the units in the warehouse and the ones in the hands of the customer, and they will be at book
Yes.
value.
Yes. I got to the side.
What?
I did not get
Okay.
when Christina asked question. That's the side I didn't get
Okay,
from.
so this is now what Christiana has. So I'll get this in the place. When you get the amount that you have in the hands of the customer, it will be maintained in the container trading account. And in that, in the hands of the customer, you have to be making sure you credit them with their returnable value. Now, some of the containers with them, they will return. Once they return, you have to debit the account, which is the total unit with the returnable value. That is the stage we are. Now, having returned this, some things will happen. The owner will have to start accounting for how many of these how many of this container is now left within. And I want you to please look at it very well. I might have to use some figures so that you will enjoy it. When they started, we were told that the customers is having 10 in their hand. And they came back and collected 15. So how much is the total unit of container in the hands of customer? 16. So at the end of the account, you will now be told that the customers are still entitled to owe some of the container. Maybe you're having them to be 15. 15. And they have returned 20. Or let's go to, we'll be told that they have returned 25. And according to the policy, they can still hold on to 15. Something has happened. What has happened? I want you guys to get that logic very well. Once you get this one, we can move. What has happened? Abibat, Jamiloju, what has happened? They had 10 in the beginning of the year. They collected more, which is 15. And we're told that they still have 15. They can still hold till next year. And they return 25. The account did not balance. The unit did not balance. So the unit that did not balance, how do you call it? Abibat and Co. Are you with me? Adesoya. Okay, it seems you guys are having network problem. It means the shortfall or the balancing figure that they could not cope with, sorry, that is still not accounted for, will be referred to as what we call retained container. Will be referred to as what we call retained container. And those are the information I want you to have. Because what you get to see is that the examiner will give you the information of the container still in the hands of the customer at the end of the period, which you will record here. Balance carried down. Then you have to now look at what is the total unit that is retained. So we have those units. And once I have the amount that is to be retained, because it's a double entry, that amount will have to go to my inventory account. So I'll come here and I'll call it retained container, and which will be at book value. So I have all values to all what I want. Don't forget, this will be a returnable value. And all these values are given to me. So I haven't gotten all these value. You can say all these are given to me in the question. This is the only one I have to determine. And once I determine that, it moves to this other side. So we come to the end of the period, balance at end. We've known the value in the hands of the customer, and which will also be at book value. Then we'll balance the whole account. The following information can also occur or could be given to us, and the first thing we'll be told is 1. I can be informed, I will be informed the units that have been destroyed. I get the unit, it will be at book value. I'll also be told the units that have been scrapped. I also get the book value, and I'll get the amount. All these will be provided. At the end of the day, my account will have a shortfall, and that shortfall will be in the unit or what should be in my store, and that will now be accounted for as what we have in the warehouse. It will always be determined, so we have book value. Now look up. When you record all these transactions in their record, this will not balance. So in order to make it balance, I will now introduce the element of depreciation, and that is going to be the balancing figure. And I can confirm if the depreciation is correct. I'll look for the difference between the cost price, that will be cost price minus book value, then times unit purchase. So that is how I get the value. And that depreciation and all those expenses items will be brought down here. And what are those expenses items? We have what we call the value that is destroyed, the one that is also scrapped, and I also include my depreciation. So that is what we have. Then if there's any amount that I realize from the sales proceeds, I also have to record that here. That is sales proceeds from scrap. So that ends all the entry. I will now balance my account. To balance the account, there will always be a shortfall at this side, and that shortfall class will be referred to as the profit. To get the profit. And that is the first method. Any question, please? Abiba Jomilojo and Co. So that is the first method. Okay. The second method, which you call the container suspense account method. Let me ask, do you want me to solve a question or I move to the second method first?
Solve a question.
Okay, let's look at a question. I'll be using one of the questions that you have in your material using that method. And once I get that, let me see, pardon. I hope I have the question somewhere. Okay. So before we now move to the P&L, we are going to see how we are going to solve using the three methods. I'm trying to open the material. So we have a question to solve. Okay, I have this question. What you sent to me. So let's have this. You have all the process that you have there, which I have also explained something. You have the three methods, which I've told you. So all this double entry that you are seeing here is what I've shown to you in the format for trading. So let's pick a question. Like this question now, if you look at this, from what you have here, the examiner needs not to tell you this is a P&L. We'll get there. We'll get there. Let's look at this question. Now, the first thing you're going to do, I want to confirm maybe you guys are with me so that I will not be the only one talking. Read the question out for me, please.
Geoglass PLC, a producer of industrial glass, dispatched its products to customers using returnable cartons. In 2017, the following
Hold it there,
information.
please.
Okay.
What is the nature of the container here? Returnable or non-returnable?
Returnable.
Good one. Let's go on.
In 2017, the following information was obtained from its record. On January 1st, 2017, the firm has 1,824 cartons in the warehouse and 1,142 cartons with the customers.
Can you see? You can see when I told you about no matter any question the examiner is going to ask you, that is how it will follow. You will first be told the information at the beginning of the year, what was bought, what was the amount that was incurred maybe for repairs and damages. Then you are now being told how many of the containers that have been discharged to customer. Are you there now? Then you now be told that how many that was returned. All those following information, you just don't get worried at all. The firm incurred 500 on repairs and maintenance of the damaged container. So it means that the container that was repaired was that amount. In this question, I want you to be very, very careful. Please be very, very careful with what we're having here. In this one, the information provided is something that I have to be very careful, and I'm going to ask in my own genuine way. We are told that 78 were sold as scrapped, not that they were damaged. So you account for that. Then when there's now repairs, you also get that. So can we move to the other line? Oh yeah, go on, please.
The firm on January 1st, 2017, the firm had 1,824 cartons in the warehouse and 1,742 cartons with the customers. 2,000 containers were bought during the year, while 78 were sold as scrapped at 5 naira per carton. The firm incurred 500 naira on repairs and maintenance of the damaged containers during the year. 6,128 cartons were discharged to customers during the year, while 5,710 were returned. On 31st of December, the customers declared closing inventory of 2,054 cartons in their stores. The purchase price of each container was 20 naira, but carried in the book at 12 naira. The customers were charged at the rate of 30 naira per carton, but got a refund of 26 naira per carton on return.
Okay. In this place, you are going to answer some questions. What is the purchase price?
20
What is the
naira.
good? What is the book value?
It's 12 naira.
12,
What is the charge out price?
30, 30 naira,
What is the returnable price?
26
26
naira.
naira.
Yeah, you guys are good. At the party, let's now go to ledger. I'm going to draw it out. Don't forget, we are using trading account. We'll still get to where we have in your manual, and you guys will see that step by step. So what are the methods that we are having?
Consider inventory
Inventory accounts.
So in this case, I'm to prepare my record. Sorry, I need you to read the information for me because I cannot read directly. So what's the name of the company? Joe Shekini. Joe Glass Pearson. Now, we are using trading account. So we are going to have what we call container inventory, or you refer it as stock. Please, whatever the examiner says is what you should use. But please, I think no examiner should be using stock again. Container inventory account. You can see now that I want to solve the question. I'm exercising a lot of patience. Just draw neatly the 3 column. So this is the first account that I need. So in looking at this class, what is the first thing I have to do? I told you it depends on whichever way, but let's adopt this method. Quantity, price, and what? Amount, or you have value. So that for consistency, please, it's not taking anything away from you. And don't forget the currency, naira, 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 naira. From what I'm having here, I'm having cartons. If you want to show skill, you have written quantity, or you can put your cartons. So that's for that. What's the next ledger I need to prepare?
Containers trading account.
Container trading account. So you have the quantity, price, and value. You have the quantity, price, and value. The cartons, you have naira. Okay, let's start. Now I'm going to solve the question according to the information. So I now need the good reader to start reading. Oh yeah, Ejo, Eka. Start. Read, please. Who is reading?
Sir, please can you share the screen again? Because I can't find the question. What page is it?
That's not the challenge. Okay. Let me try share the screen. I thought that you guys should have it. Okay, I'll share the screen.
Side, I have it.
Okay, we are sharing. Let the person read. Oh yeah, read. But you know, if I'm sharing the screen, you won't be able to see how I'm going to solve it because
I
I'm not
know,
going
but
to
no,
read
sorry.
solution to you.
What page is it?
So we
I don't
already
know
have
which
it,
page.
so I can read the question.
I think it should be page 3.
Okay, sir. Thank you.
So I have the question, so I can read it, so you can be
Okay.
solving it.
Okay, he that has the question, let him read. Okay, the person that has the question, we are with you.
Glass PLC, a producer of industrial glass, dispatched its product to customers using returnable cartons. In 2017, the following information was obtained from its record. On January 1st, 2017, the firm has 1,824 cartons in the warehouse. So we have
Go on.
okay, and 1,742 cartons with the customers.
ODDM.
2,000.
Thank you. ODDM. What was the date we gave? 1st January
1st January.
2017. I have balance brought forward. I was told in the warehouse. How many units in the warehouse? 1,824.
24.
How many in the hands of the customer?
1,742.
1,742.
42.
Immediately I have that, I quickly go to the customer's record. 1st January 2017. Balance brought forward. How much is in the hands of the customer? 1,742. So that was the first information. Any question? Do we get that?
Yes, sir.
Yes,
Okay,
sir.
let's go to read the next one.
2,000 containers were bought during the year.
So during the year,
That's
they didn't give us the date, so we were told purchase. How many was purchased? 2,000.
2,000.
So in order not to forget my principle, I'll quickly start asking myself the question. What I have in my inventory will be at book value. So what is the book value for the container in the warehouse? What's the book value?
12 naira.
God bless you. So we have
12
12
naira.
naira. But for the purchase, I'm not going to use the book value. So what is the purchase price?
20 naira.
20 naira. But in the hands of the customer, which we have in the container trading account, I'm going to use which of the value?
We're going to use 30 naira.
No.
No.
The container that is still to return.
Return.
Returnable price. Thank you, Adesanya. So how much is the returnable price?
26 naira.
26 naira. So I've written all the prices. So in that case, go on reading. Oh yeah. You said
So
2,000 containers were bought during the year.
why 78 were sold at scrap at 5 naira per carton?
So hold it. We were told that some of the container became scrap. So we are going to write it here. Scrap. How many units were the ones that got scrapped? 78.
78.
And what is the book value when they became scrap? 12 naira.
Yes.
Are you there now?
Yes.
So 78 times 12 naira. What would be the answer? 78 times 12 naira.
936.
936. Now look at this. When we are recording the first information, we only recorded them once because they are balanced but forward. For purchases, the corresponding entry will go to bank account. Are you there now? But for this scrap, it's going to be recorded twice. I will credit my container inventory account telling me that this scrap is no more in the container, but it's a cost to me. So I will now have to bring that cost to what we have in our container trading account. So I'll call it scrap. How much is the value of the container that has been scrapped? We call it 900 and what?
36.
So I have it as 936. But I realized some certain amount of money because the container that is valued at 936 was sold for 5 naira each. So I have to look for my sales proceeds. And don't forget that is going to my bank. So how much did I realize? 5 naira times 78. So how much was realized for selling this scrap? How much?
390.
390. Thank you. And that goes to the bank. So we are through with that information. What's the next information we have? Read on. The firm incurred 500 naira on repairs and maintenance of the damaged containers during the year. So it means we are now having expenses, which is repair. So I'll bring that here. Repairs. What was the value that they paid for the repairs? 500. He will not have any corresponding entry with inventory because it has nothing to do with the unit of the container. We only paid for expenses, so it goes to our bank account. Next item, please. You guys have to read, so I will know that you are with me. What's the next item?
The next item is maintain. The firm incurred 500 naira and
We have done that.
maintenance.
We have done the maintenance.
Okay. 6,128 cartons discharged to customer.
So we are now told that they discharge so to customer. So we'll now talk about charge out. The word will not be charge out. Let's use what the examiner uses. You call it discharge. You can call it discharge or you say sent to. How many units were sent to the customers? 6,428.
120.
At how much? What was the charge out price?
30 naira, but they got 30 naira.
30 naira, not that they bought. And that amount goes to the bank. So it's not going to the inventory. So the double entry has been done. Next item. The next reading.
While during the year, whilst 5,710 were returned.
We are now told that they return some of the goods. So when they are returning, it means that what you're expecting from customer will go down, and those guys will collect their money. So you come here, you say return. How many units were returned?
5,710.
5,710. And they will collect their money back at a returnable price. What's the returnable price?
30 naira. I'm sorry, 26.
Thank you. And please note that one is also bank because you are talking about return. Next item. Let's be fast.
On 31st of December, The customers declared closing inventory of 2,054 cartons in their stores.
So in the store of the customer, we are now told that what they have left in their store in terms of container, in terms of the container, is how much? How many units?
2,054.
2,054. So I'll bring it here as balance. Sorry, is in the hand of the customer. What they have left, balance brought down, is 2054. And please, why is it on the credit side here? I will explain. It's because when you get to the inventory, we are saying that the balance brought down in the warehouse, we don't know it, but we're told in the hands of the customer, we have 2054. So it's a debit balance in the inventory. It will be a credit balance in the hands of the customer. So meaning that the balance carried down, expected in the hands of the customer, is 2,054. So this is taking us somewhere, and it's going to be at their returnable price. Something will now give way. What is the total unit that has been charged out and that was given to customer at the beginning? So what is the total unit are we expecting from them that has been given to them? That is this. I'm sure you can see my cursor. So the two values here, can you give me the addition?
7,870.
7,870 naira.
7,870 naira. 7,870 naira. Now, class, they've returned 5,710, and they are yet to return 2,054. Class, is the valued balance?
No.
No, it will never. That simply means that the customer have retained some of them. So can you give me that balancing figure? I'm sure you can now understand it very well now. So 7,870 minus 5,710 plus 20,
106.
106.
106.
Class confirm, because it's not good to have a poison in this figure. 106, correct. So this retain will be a double entry in
Sorry, I
our.
don't understand.
Okay, let me repeat. Look at what I've just said here. What we have at the beginning given to the customer is 1,742. Then we charge out during the year is 6,128. So what's the total amount of container in the hands of the customer?
7,870.
7,870. We are now informed by the examiner that 5,710 has been returned, and the amount yet to be returned is 2,054. So it simply means certain amount of container is not returned, and when those containers are not returned, we refer to them as what we call retain. So what's the unit that have been retained? Amen.
7,000. I think 7,870 minus 5,710.
And then minus 2,054.
205. Okay, sir.
So do we get that?
Yeah.
And please, it should be at the book value. What's the book value? 12 naira. So that goes to our account here. retained 106 at 12. So what is 106 times 12? What would that give me? 1,272. 1,272. Is there any other information in the question? No. So if there's no other information, let's now wrap up this question. So we start. The examiner have given us the balance brought down in the customer's hand, which is 2054 at the book value, and then we'll now complete. Now, please pay attention to this again. What's the total unit of inventory that is owned by this organization? We have 1824 in the warehouse, and the one still in the hands of customer is that. So what's the total unit of inventory that we should have? I need you to give me an answer. What's the total unit that should be in the inventory? Debit side. In terms of quantity. What's the answer, please?
5,566.
5,566. That is what I should have. Now let's confirm. Out of the 5,566, 78 is damaged and scrapped. 106 is retained. 2,054 is in the hands of the customer. So how much will I have left in the warehouse? Yeah.
3,500.
Pardon?
3,500.
3,000. I disagree. No. 5,566 minus 78 minus 106 minus 2054.
Okay. So how do you get the 33 in the warehouse?
I didn't get 33. You have to give me, there's no, that's what I'm working for. You need to tell me the amount. I was following you. You were saying 3,000 something.
It's still
5,555. I'm sure
It's
you know how I got
3,000.
5,555. So I haven't gotten
Yes.
5,555. I have to subtract all this to know what is in the warehouse. So how much am I going to have in the warehouse?
3,328.
Correct. 3,328. So we'll fill in all the gap. So let's now attach all values to all this. So we have this as the book value. So let me get all my value. 1824 times 12. What would be that? That will give me 21,888. Then I have 17,420 times 12. That will also give me 20,904. Then I have the other one, 20,000 times 20. That will give me 40,000. So I have to insert all the figures. 3328 times 12. I hope you guys are also calculating so that you said I brought the figure from home. 39936 and 2054 times 12. I'll give me 24,648. So now I have the one that is also in the warehouse now. 3328 at 12 at 12. 39936. Then this 24648. Now, can you give me all the addition on the debit side and the addition on the credit side. 21,888 plus 20,904 plus 40,000. So that gives me 82792. Now check all the addition on the credit side. It will not balance. Let's confirm. 936 plus 1272 plus 39936 plus 24648. So I have it to be 66,792. So I have a shortfall minus 82,792. So what I'm having as the balance is 16,000. So I'm having it as balance 16,000. That 16,000 will be referred to as my depreciation. So I can now have the total figure for this question. This is now 82792, and that is it. So this depreciation, if you want to confirm maybe you are correct, you can easily just work it out. Say 20 minus 12, whatever answer you get times 2,000, it must give you the value of 16,000. Then I take the depreciation account here as the expenses. At the end of the day, I now need to determine my profit. I 1742 times 26. That gives me 45,292. Then I have the charge out 6128 times 30,000. That'll give me 183840 plus 319 plus 45,292. So the total answer there 29, sorry, not 29, is 229,522. So I have it here 229,522. So what's my profit? 2054 times 26. That's giving me 53,404. So my balancing figure will now represent my profit. And let's get the profit. So I have 229,522 minus 53,404 minus 16,000 minus 1272 minus, we've not done the return, so let's quickly do that. 26 times 5710. That gives me 148,460. So let me now get that. 936 plus 500 plus 148,460 plus 1272 plus 16,000 plus 53,404. So I'm having 220,000. So I subtract that from minus 229,522. So the profit I'm having for the period here is 8950, and that is the question. That is the answer. Any question? Any question, class? Hello? You guys are not
No,
answering
sir.
me?
No,
Okay.
No,
sir.
sir.
Now, where I want you to focus is that What is the profit I've realized there? The profit is how much? 8,950. If I use any of the method, even I'm going to explain the second method to you on the third method, the profit will be the same. So if you check what you have in your material, where the examiner have used the P&L, are you there? The profit realized was also 8,950. So that's that. Can I move to the second method?
Yes, sir.
Okay, let's go to the next method. The next method is telling us that we should use container suspense method. And when we are using container suspense method, we are going to have two ledgers. Are we there now? And the two ledgers are still what we have done and we have done earlier. And I don't want you guys to get scared. This topic is very simple. So can I move to the container suspense method?
Yes, sir.
Container suspense method. Why are you sounding that way? You guys are making me get tired though. Is it that it's very difficult?
No, sir.
So when I'm through, you guys do, I might give you an exercise apart from what you have been given in the class. So you guys will practice that. Okay, let's go to container suspense method. Okay, you don't want exercise, leave that one
No,
before you
what
start
am
running
I?
away. Let's look at container suspense method. There are two accounts that we're also going to prepare. You have the container inventory account. So I think you prefer me doing the format first, or you just want me to solve the question.
No,
Should I still draw the format? Okay, maybe when I'm through, I will send you this the right thing which I'm doing, which is the PDF. So we have container, the container inventory account. Now in this case, we are using suspense method. So we are now going to have what we call container suspense account. Once you know these two methods, the third method is everything, because the third method is the fusion of the two. And that's why you always see examiners are always very happy to ask you the P&L. And why I've started with this is that once you guys get this one simple, you guys can now get the one that you might think is difficult, but is the simplest. My people, can we go on? So we start from the narrative. The narrative will always be the balance brought forward, either of the inventory in the hands of the owner in the warehouse and that in the customer. So they give us the unit. Whatever is in the hands of the customer, I always tell you, you must go to the other account, balance brought down. That is the unit that you have. And please note, we are still doing the same thing. What we just have here, which is the fundamental and the very funny, is that we still maintain this one as book value and book value. Then you purchase more. When you are purchasing more, what do I have? We have purchases. And please, I need your help. What will be the price for the purchase? Cost shaking you, cost price.
cost price.
By good students. And that the corresponding entry will be in the bank account. Next, you have charge out. which I told you. We can call it sent to customer, or we can say discharge to customer. So you have the value here. So at this point, don't let
Sorry,
us
sir.
forget. Yes, please.
Is it like the same method, like the same
Uh,
format
it,
for the
it
last one
looks
we
the
just?
same, but you see a bit difference as you are going now.
Okay.
And that's why you can see the first one I gave you, because you've had that understanding now, you are now enjoying it. But it's not the same. Please be very, very careful. Charge out. This one will still be at the returnable value. No wahala. You can see we are still within the peripheral of what we have. Then we'll be told that it's still returned. We talk about return, which is a returnable value. That's what the examiner will tell you. Now we start going to where there will be slight changes. For example, if you are told that the container is damaged, yeah, destroyed, no money is coming in, you only account for the quantity. But when we're using the container trading account, we accounted for the quantity and the value. Have you seen that difference? If it is scrapped, are you there now? Scrapped and sold, we will account for the quantity, and whatever is the scrap value that we realize will come in here. That is our scrap value. Additional income. Alpha is looking YY. It shouldn't be. After that, the information that will be given is returned. Then I now told you that after you talk about the ones that have been returned, the next the next information the examiner will provide will be the information relating to what is left in the store. Balance brought down. They will give you the value of the customer, which you have. And don't forget here, we are still maintaining at book value. Customer at his book value. But when we get to the book maintained for customers alone, you get that customer's value, but it will be a returnable value. Returnable value, please. And once I'm being provided with this information, I can now get the value that have been retained. I get my value that has been retained. Get my value as have been retained. Please note, at this point now, this will be called the returnable value. I want you to know that this balance, this one is always a balancing figure to get the unit. Then the value will be provided. And please, that will also be the double entry, which will come here retained. It will be a returnable value, and that value you have gotten, and you put it there. If there's any expenses incurred under this condition, that expenses will be accounted for here. All things being equal, everything inside there should be self-balanced. But it won't be, because there will be a shortfall. And what has caused that shortfall is because the charge out is not recorded at the returnable value. So the balancing figure haven't insert all the other figure. You are going to have a balancing figure here. And that balancing figure will be in the value, and that will be called higher charge. Please, that higher charge will be a double entry that will come here as well, called higher charge. Class, any question? Àti parí eléyìí o. So we just have the one that has to do with the warehouse, which you have to determine. You have the book value, all value well determined. Then there will be a shortfall or a balancing figure for us to know the amount that we have. At the end of the day, we have included our charge out and not the rest. So we are going to have a balancing figure. Under this place, this is where we are going to get our profit. So whatever is the balancing figure here will now be regarded as our profit. Any question for me? So can I use this to solve the question also? Hello?
Hello, sir.
So should we go using the suspense method?
Yes.
Okay. I hope you guys are not sleeping because I cannot see you. So if you are sleeping, I won't know. Hope not that you just on the data and you are making me to talk. Okay, let's solve the question. So in solving this question, I will still need you to give me that information. So we are using the suspense method. So what is the name of the company? Geoglass
Geoglass
what?
Geoglass.
Geoglass what?
PLC.
PLC. So under this situation, we are using suspense method. So what's the first account we need to prepare? Container inventory account. So we stick to the method. We have quantity, price, and value. Quantity, price, and value. So what is the next account we are asked to prepare? What will be the next ledger?
Suspense.
Container suspense account. So I have the quantity, price, and amount. I have the quantity, price, and amount. Okay, read the question now. So we start. Read again, please. I can't hear you.
Geoglass PLC, a producer of industrial glass, dispatched its products to customers using returnable cartons. In 2017, the following information was obtained from its record. On January 1st, 2017, the firm has
So let's start from
174
that.
cartons in the
1st January
warehouse.
2017. Balance go forward. In the warehouse, how many do they have in the warehouse?
1,824.
8,124. How many was in the hands of the customer?
1,742.
1,742. So I'm interested in the one in the hands of the customer. balance brought forward 1,742 at a returnable price. What's the returnable price?
The returnable price is 26
26
naira.
naira. What's the book value?
Book value is
12 naira.
12
Okay,
naira.
read on, please. We are now told that the purchase
2,000 containers were bought during the year, while 78 were sold
let's
as
take it
scrap
one
at
by
5 naira per
so this goes to
carton.
bank. How much was the amount they bought it? 30 naira. So the bank is
Yes.
on. But we're now told that certain amounts were destroyed and sold as scrap. So how many were destroyed?
78.
78.
78.
And when they were destroyed, how much did we sell them? How much did we
5
sell them?
naira.
So
5
what's
naira.
78
5
naira
naira.
times 5 naira?
390.
390. And that goes to our bank. So it won't go to the suspense account. Next, what do I have?
The firm incurred 500 on repairs and maintenance of the
So we
damaged
now have the
containers.
repairs, which also goes to the bank. 500. Next,
During the year, 6,128 cartons were discharged to customers
so
during
let's
the
take
year.
that. Discharge to customer. How many units?
6,128.
And what was the charge out price?
The charge out price 30 naira.
Are you sure?
Yes.
What was the amount that we bought it? Because I think you started giving me poison. What was the amount that we bought the container?
30 naira.
Bought the
The normal
container,
20 naira.
bought the container for 20 naira.
Yes. Okay.
And it was charged out at 30 naira.
Yes, that's what I said.
Okay, so we now have bank. Next,
While 5,710 were returned.
so we have the one that were returned. And give them back their money. How many units were returned, please?
5,710.
5,710. And what's the returnable price? 26.
26.
Next,
The returnable set
I'm
on
listening.
31st December, the customers on 31st December, the customers declared closing inventory of 2,000
So that means the amount that is still
2,054
left
cartons.
in the hands of the customer that they've not returned.
That's the mark.
Balance,
Don't
the balance that is yet to be returned.
do that.
In the hands of customer was how much, please? How many units?
2,054.
54. And that is still, yeah, I've gotten that, madam. So what is the next information we have? Okay, that is all.
Yes, sir.
So let's start from here. We have the balance brought down to, which is 2054 at 26, because that is the amount still in the hands of the customer, which is our balance carried down. 2054 26. So let me first get the total unit that was retained. What's the total amount of the item that was given to customer? That is 7870. 7870. So the one that are being returned, what's the total amount that have been returned? Let's look at the total amount that have been returned. Yeah, Ejo. That is 78 minus 510 minus 2054. So that gives us the unit that will be retained. So what's the unit that is being retained? 106. And at the returnable price of what? 26. So don't forget, that will come here to retained. $106 and 26. So having gotten all those information, let's wrap up this one that will be at returnable value and we balance the account of. So let's have 5710 times 26. That gives me 148460. 106 times 26. That gives me 2756. 2054 times 26. That gives me 53404. 1742 times 26. That gives me 445292. And 6128 times 30. That gives me 183840. So I add that to the amount of the 45292. So what's the answer I'm having? That is 229132. So that is 229132 minus 148460. This is 148460 minus 2756 minus 53404. So the balancing figure I'm going to get is called higher charge. And that is 2424512. I want to confirm maybe what I've done is correct. So I have to do the higher charge. That is 30 minus 24, which is the returnable. Sorry, minus 26. Then times what is the return? 30 minus 26. Then times what was charged out rather. So that is correct. Times 6128. This multiplication must give me this. Then we'll go to the inventory account. I have my charge out, which is higher charge. And the amount determined was 24512. So let's balance the whole account. What do I have in the warehouse? We work that out. 1824 plus 1742 plus 2000. I'll give me 5566. 5566. So minus what I have there. I have 3328 times 12. 399 that's 24648. And let's key in all the figures. 1824 times 12. That's 2188. 1742 times 12. That's 20904. 106 times 26. That's 2756. So can we determine our profit? That's 390 plus 2756 plus 24512 plus 39936 plus 24648.
92,000.
91.
92,242.
Thank you. 92,242. 92,242. Can I get the credit side?
20984.
And don't forget, you must account for the.
40,000.
We need to account for the depreciation. What's the value of the depreciation that we calculated then? It's 16,000.
The value for 1,000, yes.
Is how much?
16,000.
My depreciation is how much?
16,000.
16,000. Okay, tell me what will be the balancing figure.
So how do you get 16,000?
The
64,000.
16,000 is the amount that we have for the depreciation.
That's possible.
Have you gotten the value now?
64,087.
We have not done. Something is missing. We didn't calculate for the purchases.
Oh.
What's the value for purchases? 22,000 times 20. That is 40,000. And this one is 500. To confirm now, don't miss any figure. That's 2004 plus 40,000 plus 500 minus 92,242. What did you get? Oh, sorry.
8,000.
Please help me. 8,000 what? What's the profit? 8,950. Is that the same thing we got in the first method? Yes or no?
Yes.
Yeah. So you can see that whichever method you use, we're going to get the same profit. So that is it. Please don't include the depreciation because it will take itself out itself. 92,242. So this is the second method that we have done. These are 12, 39936, 24, 648. And then this 3328. Okay. Do you have any question? So that we can go to the third method. You can see same question, we are getting the same profit. Can I move to the third method?
Yes, sir.
Now, under the third method, I'm sure you have been familiar with that. So I'm not just going to bring it out. And let me just give you this joke and you get to laugh. The container inventory method that we did while we are doing container trading account is what we are going to repeat. Why the container suspense account that we prepared under the container suspense account is what we are going to repeat. And the account will be transferred to the P&L. Any question? Do you want me to do the format for the third method or I should just prepare the account?
I just prepared the account.
Okay. Can see my people are tired. Let's go to the third method. The third method is saying we prepare what we call container using container P and L method. So under this method, you are having three ledgers. And please, I want to beg you, those three ledgers are very, very important. So it depends on whichever way your examiner is going to let you know. It is called one, container inventory account, then container sent to customer, then container suspense account. Will you get that,
Sorry,
please?
Mr. Emma, I want to ask you a question.
Yes, please.
Like in the question that we just did now, so anytime they give us like the closing inventory, means the closing inventory is always for the customer, not the warehouse.
Yes, please. It will always be for the customer. And check.
Yes, sir.
However, please pay attention. The examiner can decide to give you the one for the warehouse. If they give you the one for the warehouse, you can still get the value. Because look at this. Let me just show you. The examiner won't give you the amount for the customer. They'll give you the one for the warehouse. And from here, you can know the amount that is going to be given to the customer. So a twist can come in. So if I know the amount that have been destroyed, the amount that have been retained, then I can, because if the examiner is going to give you the one that is in the hands, that is the container in the warehouse, he must provide you with the information of the container that have been retained. If not, he must provide you with the ones in the hands of the customer, because you must not be given two unknown. Any question? If there's no question, let's go to the other method. Are you sure we can do investment today? Okay. Let's look at the other method, which is the container P&L method. So we have what we call container inventory account. That's the first account you have to prepare.
Sorry, sir, are you going to send us what you've been solving since?
Pardon?
Are you going to send us like this particular thing you'll be solving? Are you going to send us the slides or?
I will try do that.
Okay.
If you need it, I can send it, but if you don't need it, I keep it.
So please remember this. Thank you.
And again, for everything I'm teaching you, you can also get it on the YouTube when you are through. So you can still play it back. Don't forget, we still work with our own scenario. What's the, I think the was use this. So under this method now, the second ledger we are going to have is called container. Are we there now? Sent to customer. Container sent to customer account. Then we have the third ledger. Yeah, I have this as quantity, price, and value. Quantity, price, and value. Then we have the third ledger, container, suspense, account. So I hope this room will not disrupt my internet. Quantity, price, and value. We have the quantity, price, and value. Then the third account done. So we'll now move to the next account. That is going to be our P&L. Refer to it as called profit or loss on container. And decide to use ledger or use the statement format. So let's start. You read the question all over again, and then we'll pick them as they move. Oh yeah, please, I'm listening.
Gen Glass, Geo Glass PLC, a producer of industrial glass, dispatched its product to customers using returnable cartons. In 2017, the following information was obtained from its records. On January 1st, 2017, the firm has 1,824 cartons
Let's
in the
start with that.
warehouse.
1st January 2017. Balance brought forward in the warehouse is how much, please?
1,824.
24. Then how much do you have in the hands of the customer?
1,742.
1,742. This will be at book value. And then we go to the corresponding entry. And please pay attention to this corresponding entry. The corresponding entry from what we have been taught earlier, go to the container suspense account. So I have it a balance brought forward. How much was given to the customer? 17,000. Oh, sorry, 1,724.
1,700.
Am I right?
Yes, sir.
And what's the returnable price?
20, 26 naira.
26 naira. Now, please, this account that we are having here that is called goods sent to the customer, we are going to use it to monitor what happened to the customer. And it's going to be like a double entry of the suspense account. Now, let me take you back to what we have done. I started with two methods: container trading account and container suspense account. Now, P&L, we adopt the container trading account branch inventory. The way we prepare the branch inventory in the container trading account is the same way we prepare this branch inventory. Now, under the suspense method, the way we prepare the container suspense account is also the same way we prepare this. Now, the question will now be, where comes the container sent to customers' account? The container sent to customers' account will be a double entry. We mirror whatever I've done in the container suspense account. So let's go. In my container suspense account, I have credited the amount that is still with the customer. So I will go to container goods sent account. I'll now come here. I'll say balance brought forward. That is 17,024 at 26 naira. Please, it's just mirroring what is in the goods sent. Next, I need the next information. Read. We have done that one.
2,000 containers were bought during the
Thank
year.
you.
Why
So
78?
let's look at that. Let's take it one by one. Purchase, bank, 2,000 was bought at the rate of how much? 20 naira. It goes to bank account. It's not going to suspense account. Next item.
78. Why 78 were sold as scrap at 5 naira per carton?
Okay, now look at this now. We were told that 78 were sold as scrap. So I will now have to come here, scrap. I need the cost. 78 at 12 naira. That is the cost of what was sold. How much is that going to be? Cost.
Sir, okay, so for this one, we're not going to times the scrap with 5
No, we are
naira.
not getting the. Remember, when we did the trading method, we didn't put the profit realized at all. Oh, yeah. So what is that? We need the book value. 78 times 12. What is 78 times 12?
936.
936.
Sorry, Mr. I want to ask a question. So,
Yes,
like
ask,
the,
man.
the, f- the 5 naira that they are giving us, we're not going to, we're only going to
We are going to
use
see it. Just hold on. First of all, we're told that we sold an item. The first thing you need to ask yourself, what is the cost at the book value? It means it was 936 to me. And that which you have sold is an expenses. So I've gotten the expenses. So what I will have to do is to go to my P&L and I'll come here and say scrap. I come to my P&L, scrap. That means the cost of what is scrap. Cost of scrap. How much is it? 900 and what? 36.
36.
But when I scrapped it, I raised some money, and that will be called sales proceed. So how much did I realize when it was sold? And
That's
don't forget that money
390.
goes to my bank. Pardon?
390.
390. So that is the double entry. Can you see? No thinking is required. What's the next item?
The firm incurred 500 on repair and maintenance of the
So
damaged
when you
containers.
incur repair, it's a P&L item. So we bring it here. Talk about repairs, which must have been paid for. How much, please?
500.
500. Next item.
6,128 cartons were discharged to customers during the year.
Okay. No rushing. We take that to our suspense account. We're talking about discharge. How many are they? How many in terms of units? 6,000. I'm listening.
So, Mr. Mr. Emma, sorry, I want to ask the question again.
Yes, ask.
So it means like for if we're using container suspense accounts, we're not going to find sales proceeds.
Then, because in container suspense account, are you there now? The container inventory account will be used to determine the profit.
Okay. I understand, sir. I understand now.
What is the charge out?
6,128 cartons.
6,128, and it was charged out at 13. Don't forget, there won't be any double entry because it's going to bank. But we have an account that we are using to monitor the transaction of the customer. We'll bring it here. We talk about discharge. How many was that? That's 6,128 at 13 naira. That is done. Next. Yeah, next information.
Why 5,710 were returned?
Returned. So we just go back. Returned. 5,100 and what? 70 at the returnable price. Don't forget, it's going to bank. But there's a account that we are maintaining to mirror suspense. What's the name of the account?
Sent to customer account.
So I have it returned. How many units was returned? 5,170 and 26. Next.
The customers declared closing inventory of 2,054 cartons in their stores.
Let's now wrap up. We now come here, closing. We have our balance brought down by customer. Then we have the one by warehouse. They're giving us that of customer to be 2,540. Yes or no?
Yes, sir.
So I have that of customer 2,540. Please don't rush. At book value 12 naira, 12 naira. But we'll go to the container suspense account. We also have to make sure that we duly recorded it. It's duly recorded so that we don't have poison. So we now have balance brought down 25.4, but this will be our returnable price. Balance brought down, that is 25.426. Okay. There's a account that mirrors everything that is happening in that account. What do you call the name? Good sense. So I have it a balance brought down That's 2054 at 26. Then I have your balance carry down 2054 at 26. Next, what do I have in the question again?
That's all, sir.
Okay, now that we have ended everything, let's start from where is always the starting point. So come to the customer's account, which is container suspense.
Super.
Get the value. What is the total amount that we have? I think you have done that container already. So let that not disturb us. What do I have? Total unit I have here.
24 times
1724
24.
plus
That's
61.
44,000.
No,
44,000. The
which one is 14?
first one now.
Why are you giving me? You know, we have to get the return first. That is 1724
Yes, yes, that was
plus
um,
6128.
six
Don't
one
jump the
two eight.
procedure.
Yes, should be
That is 7852.
5 2.
7852. So how much is the one that is now retained? 20554. So I need to go ahead the retain.
That's 7852 minus
So what will be the
5107.
retain?
That's going to be
I'm sure you know how to get the return.
628.
You're on your own.
Yeah.
7,852 minus
Minus, yes.
5,170 minus
Yes.
205. How much?
I said 62, 628.
Uh-uh. Thank God I have calculator. 7852 minus 2054 minus 5,170. What do I have?
6,000, I mean, 628 now.
You sure that you are not giving me poison?
If you say it here,
What was the amount we got in our
when we did our
Amuledu?
retain, sir,
You have given me poison, oh.
I'm not the one, though. I give you. I don't
Let's
give you
get the
poison.
addition. Because this value should give me the same thing,
Same thing.
1742. So let's go
Plus,
back. 1742, 1742 plus 6128.
wait. No.
What did you get?
7,852.
Are you sure?
Yeah.
I need your help. Because this is the same thing I'm repeating now.
15, yeah.
So where are you getting 52
You
from?
are the one that your return. You are the one that made the mistake in your return. It's not supposed to be 5,170.
What's my return?
You wrote this return. You wrote 5,170. It's supposed to be
What should it have been?
5,710.
The return should have been how much?
5,710.
Okay, I was testing you. 5,000. Pardon me. As I was looking at it, that hope you didn't bring the figure from home. 7,000, 5,710. So what's now the balancing figure, please? The retain. Should give me 106. Are we on the same page now?
Mr. Emma is giving me
I'm
minus
giving you poison.
5,000.
Okay. Please, this
Yeah.
will be at the returnable price, 26.
He's giving
Please
me
don't forget.
88.
Huh?
He's giving me 88.
It's giving you 88.
Yes.
Let's confirm. Let's add again. 1724 plus 6128. What would that give me? Please confirm again. What's the balance brought forward in the book of the customer? It's 1742. Where did I get 24? Okay, I picked that one. You know, when Some of you wake up and you've not eaten. This is 1742. So can we add again? 1742 plus 6128.
Okay, it's not
That
correct
is
now.
78. Okay, thank you. Okay, I think I have all the figures correct. So we can now move on. So we also come to cost of goods,
So,
sorry, container sent. So we have our retained. That is going to be 106 at 26.
six.
But please note, whatever we are going to write in the container inventory, that will be retained, which is 106, must be at the book value.
Two.
Yeah, must be at the book value. So that is that. Any other information? Is there any other information
No,
in the
sir.
question? No. So let's wrap up without any figure poisoning us. So yeah, now we can now get the warehouse. So can I get the value for the warehouse? Remember, we get the total of this 1824 plus 1742 plus 2000. We give me what, please? 5566. 5566.
That's
So
five and six.
subtract. What did you say, madam?
Nothing, sir.
Minus 106 minus 78. Then minus 2054. The answer is
3,000. Yes.
3328. That is at 12. Okay? And I told
Yes.
you at that time that whatever you're getting here, there will always be a balancing, because this must be self-balanced. And that balancing figure will be called depreciation. Let's quickly work that out. It's just copying what we have under the trading account. 1824 times 12. That gives me
1 6.
21,888. Where did you see 16?
No, don't worry. I'm not talking to you.
Times 1 times 12. That is 20904. Then 2000 times 20. That is 40,000. So let's get all these one figure. 3328 times 12. And give me 39936. Then 2054 times 12. And give me 24
For it.
648. Okay. 2188 triple eight plus 20984. Is it 984 or 904? No, it's 40,000. That gives
984.
me
It's 904.
82. Is 904?
Yes, sir.
Okay, 904. Okay, what's now the balancing figure? 106 times 12. That is 1272. Look for the balancing figure here. That balancing figure is our depreciation, which we can also calculate, which will be 20 minus 12 times 20,000. That is 20 minus 12 times 2,000. That will give me 16,000. And this is balance. So that is 82792. Don't forget, depreciation is a statement, sorry, it's an expenses which go to statement of profit or loss. So I bring it here, depreciation. What's the value of the depreciation, class?
10,000.
6,000. Okay, let's now wrap up all the other accounts. We are through with inventory. So the first account that we need to wrap up will be our suspense account. So let's wrap up suspense account, please. And that will give us 5710 times 26. I think we have an
It's
amount
one.
before.
Yes. One.
Yeah, from
Fourteen
Lansai
thousand.
Joe.
148,460.
Okay, what's now the retained? That is 2756
That's it.
and 1742
And
times 26.
45,292.
Okay, what is charge out? Hey Joe,
Is 183,840.
183,840.
3,840.
Okay, what's the other one? 2054 times 26.
53,404.
So give me the total. Because here I must be able to know what is my higher charge. The total on this side is 45,292 plus 183,840. So what's the balance
72.
figure?
Oh, no. 24,512.
24,005.
24,512.
Is that what you got before?
Yes, sir.
Is that
Yes, sir.
24,000?
512.
24,000?
512. Yes, sir.
512. I will confirm maybe what you have said is correct. That is 30 minus 26 times 6128. 30 minus 26. 30 minus 26. Then times 6128. Correct. So no wahala. So this is my higher charge. If you go to my P&L, go to my P&L. So I go to my P&L. I have what called higher charge. And what do you have? 24,512. So let's wrap up all these accounts so we don't have them losing around. So what do I have here? You will just look at it. This is just the mirror of everything I've done the other side.
No.
Give me that figure. Provide me figure, Joe.
That's 44,824.
40,
44,824.
sorry, there was a poison. This should have been 1742.
44.
So give us the new answer. Christina, no figure. Okay,
45,292.
45,000.
292.
45,000.
292.
292. What is for charge?
183,840.
183,840.
8,840.
Okay. Let's go to the other side. Now that is 5,710. So what's the answer to that? Please give me figure, Joe. Yeah, it
Answer
return.
to
To the return.
148,460.
148,000. 148,460.
460.
What's the other one? 106 times 26.
275,000 2,756.
2,700 and
56.
Okay,
Sir, no,
what's the
five
next one?
six, 5 6, not 6 6. Mr. Emma, 5 6, not 6 6.
Is that 56?
I said 50, 50, not 66,
Okay.
50.
Okay, oh yeah. What's the next one?
Then
What you are just doing is that
53,000.
everything, see, everything on the debit side here.
Okay, okay.
What you are giving me on the credit. So why are we touching on
So,
the word, Daddy? Oh yeah, give me answer.
53,404.
16,404.
I said 53,404, Mr.
Okay,
Emma.
53,404. So
404.
what's our higher charge? Just give me the value
Uh,
as you have it on the other end.
24,512.
So that's 24,512. So let's go. You can fill in the rest. 3,404. So what is the amount we have at the other side? 7870, 7870, 7870. What's the total figure I have?
Mr. Emma, answer the
229,132.
question.
Yes, please.
Mr. Emma,
229,132. I'm
this
listening.
this customer suspense account is just like us
Yeah.
doing the same thing under the container sent to customer account. So I just putting it the upper vice versa.
God bless
Okay.
you. You see, it's the same thing that you have in the container suspense account, but you are just doing the corresponding entry. You are just mirroring it. It's just the mirror of the container suspense account.
This account. Okay, sir.
So I think we are true. So let's now get our profit. So what's now our profit? What's the total income? What's the total income? Measure 390 plus 24,512. Okay, go.
I said 24,902.
34, okay.
24. I said 20. No, okay.
Okay.
I'm so,
I subtract this.
17,436.
Kí ló pé?
So can you hear me? 17,436.
What is the balance that we're having? Are you sure you are not giving me poison?
7,466.
7,000
So
what?
466.
I need the balancing figure. The
That's the
figure
balancing
must be the
figure.
same thing.
That's the balancing
No,
figure, Mr.
it
Emma.
can be. Something is missing and you are going to look for it because it must be equal to all what we have been doing before. 500. Oh yeah.
So I'm doing it, sir.
Profit, there must still be. We have done that. 3,000.
Seven, um, it's 7,460 is what I'm getting, but the normal profit is supposed to be.
4,000 what?
I'm getting 7,000. It's supposed to be 8,950, but I'm
Something
getting
is missing.
7,007.
You have not picked one of the figures right. Let's just go on. And I can easily sense that figure to be, okay, let's go. Our retain, what was the value of our retain? At 12 here,
2,756.
2,756. And then we have it here. We have not accounted for our profit for retain. And let me show you. That is what I always tell my students and you do. Look at what we have. What is the amount? What was the accounting entry for the retain? At 12 here, yes or no?
Yes, okay. And there was
At
sales
that place is 12.
proceeds.
But let's go to our book value. And that is the number one way for students when it comes to this method. And I always tell my students to watch out. This is 12. At this point too, this one too will be at 12.
Okay.
So if it is at 12, tell me what will be the value. Hold on. 106 times 12.
Okay, it's true because like we recorded it at
Uh-huh.
12 in
So that
our
is it. We
container
recorded it
inventory
at.
account.
Oh yeah.
So
What is it?
that's 1,272 naira. 272.
1,272. Are you getting that now? Now, if you work this account will not balance. And why it will
So
not balance is because we need to account for the profit on
it's
retain. So what's the profit on retain? That will now be it will now be 26 minus 12 times 106.
times 106.
Yes, oh yeah, give me the answer. That is 26 minus 12 times
That's
106.
140, 1,004,
That is
yeah,
1,000.
1,484. Yes. So can you hear me?
Ishokuzu, 26 minus 12 times 106.
Yeah.
That is
It's
1,484.
1,484. That is it.
Okay. So I will now account for the profit. Profit on retain retain container. Profit on retain. How much did you call that? Retain. 1484. So
So we're going to change
to
the value in
confirm.
our container sense account.
Now we have done this. Now if you look at it, I'm not going to change the value in my containers sent to
Center.
customer because everything in my container sent to customer must be at the value, must be a returnable value, and I'll just balance it to give me my higher charge. Do you get that now? You know the double entry that we did for this retain is that
Yes,
we
sir.
credited suspense account and we debited container suspense account. And what did we do
Look at
in the
certain accounts and
container's inventory
we
account?
credited container.
We crediting. So the shortfall
Yes.
that was not taken care of is the profit. So what do I have? Now let's get the answer.
Yes.
What's the total here? 390 plus 24512 plus 1484. What's the total?
That's
20
26,300 and 386.
6,000. So what do I now have as my profit? And I need my profit.
8,950. So it's correct now.
So my profit is 8,950. So check all the three methods. You are getting the same profit. Any question? Now I observed something from the manual you sent to me. I don't know, maybe it was a typographical error. When
No, sir.
you were recording at the container inventory account, they put it at cost. It should not be at cost, please. It should not be at cost. And when they were actually recording the container sent to customer, they maintained everything at charge out. I would advise that you guys confirm what we have done now. Actually, any question again?
No,
I
sir.
think this is the end of container. Yes. What's your question? Yomiloju, any question?
So, Mr. Emma, it means we're going to put the profit. We're also going to record the profit on retained in our container sent to customer accounts.
No.
No, okay, that was I get.
You know, that one's already written as the returnable value.
Return value.
So the account will just balance.
Yes, sir. So it means most time like they always ask this third method.
Yes, please. And if you look at that third method, it encompasses the other two methods. Any other question?
No, Sam.
Okay, what I'm going to do is that I've observed that I think your internet is having issue. So I've been able to do the container for you. So the next topic we are having is investment. You can't do investment now. Maybe we'll agree on another time and you talk to Abibat and maybe you can have enough number. So we'll now move to the next one. So this container account using the three methods and I haven't used that same question. Do you have any question?
No, Sam.
Okay, if there's no other question, you
Mr.
can
Emma,
share. Yes, please. I'm
Mr. Emma, can
listening.
you hear me?
Jomiloju. Yes, please.
Like the next time also, like what to do account of insurance companies.